We can now look at question number 2. It says, you are a senior audit trainee at P&H Auditors. You are currently involved in the audit of Wood Pty Limited, a company that sells wooden furniture. The company sells both new and antique furniture. Wood is a registered VAT vendor with a 2-month VAT period that ends February, April, June, August, and December. All right, so remember what that means? So it says it ends February is the first one. So Jan and Feb, March plus April, May plus June, July plus August, September plus October, and November plus December. So those are 6 VAT periods for the year. So antique closet. Wood purchased an antique closet for 150,000 rands, which is his open market value. Remember, open market value is equal to the amount of the market value including VAT. And he purchased it from Mr. Lambie, a pensioner who is not a VAT vendor, on the 10th of February. Okay, so immediately the warning signal should go off for you that this is a second-hand goods purchased from a non-vendor. Okay, Wood paid Mr. Lambie 100,000 rands immediately and the remaining 50,000 on the 5th of May. So see here now also payment for this when we bought it on the 10th of February, 100,000, and then on the 5th of May 50,000 was paid. Now, why is this important? Because when you have second-hand goods purchased from a non-vendor, you have to remember there's a special timing rule which says claim when paid. And I'm just reminding you there's also a special value rule which says lower of cost or open market value. And you can see here that they tell you the cost and the open market value in this case the same amount. Right, Wood sold the antique closet at an inflated price of 280,000 rands excluding VAT to a wealthy homeowner in Cape Town. Wood sold the closet before it settled the amount owing to Mr. Lambie. Wood sold the antique closet on the 22nd of February and the customer settled the account on the 14th of March 2019. Alright, so they're saying here he sold the closet before he paid this 150,000 rands to Mr. Lambie. Does that make a difference? No. Okay, now, what does the required ask us? The audit partners ask you to provide a basic description of the VAT treatment relating to the antique closet purchased and sold. You must clearly indicate the VAT returns that will be affected by this. Now, guys, this question over here is very deliberate why I've put it in here. It's a question that shows you how to discuss VAT questions. Now, you will remember, I kept saying also in the lecture that when you have a discussion question, you need to be able to discuss any definition, if there is a special definition, but more importantly, the timing and the value rules, and then any other special rule. So, this will give us what we need to do for discussion. So there's 2 parts to this. There's 2 transactions here with the antique closet. There's a sale, or there's a purchase. We buy the closet first, plus a sale. The purchase is input tax. The sale is output tax. So see now how simple it is. We just now go and discuss them separately. So let's start with the purchase of the antique closet. So you'll make a comment first that say that, so let's remember now this closet, you want to talk about the fact that it's input tax. You have to mention that always first. Now, in this case, we can just answer our question correctly. We already know that this is second-hand goods from a non-vendor and that you can claim notional input tax. Now, we can already discuss this because we can now say the antique closet is second-hand goods purchased from a non-vendor. So now, why are we saying this? Because the definition in section 1 of second-hand goods indicate that it must have been owned and used, which is the case. There's nothing that indicates to us it's not. They might give you a mark for the definition, but they might not. But now we have to discuss it. So now, what does it mean? We can claim input tax. How do we know we can claim input tax? Per paragraph B of the input tax definition, in section 1, we may claim notional input tax on second-hand goods from a non-vendor. So can you see, guys? This is obviously just straight theory. Now we're going to talk about it. The value rule states must claim on the lower of cost, which is 150,000, or open market value, which is 150,000. The timing is discussed in section 16.3a. The timing per section 16.3a. What does that tell us, guys? It tells us that can claim to the extent of payment. So what do we know in this case? It was paid. How was it paid? On the 10th of February, 100,000 was paid, and on the 5th of May, 50,000 was paid. On the 10th of February 2019, 100,000 times 15 over 115. Right, this was in, when was this? In February. What VAT return is it? It is in the January and February VAT return. So we will state here, you can claim in the February 2019 VAT return. Then there was another payment on the 5th of May. It's the 50,000. On the 5th of May, 50,000 times 15 over 115. $6,522. This is in May. When does May fall? It falls in the May and June VAT return. So can claim in the May 2019 VAT return. Alright, so that's it, guys. That is it for the purchase. Now let's talk about the sale. So what happens with the sale? It was sold for 280,000 excluding VAT, and it was sold on the 22nd of February, and it was settled, paid for by the customer on the 14th of March. So what do we know about this? The sale. So sale is now output tax. So we will state there must be output tax calculated. Why? Per what section? Per section 7(1)(a), as there was a supply. So now we state the theory. There was a supply, which is the sale of goods, the desk, by a vendor Wood is a vendor. In the furtherance of its enterprise. This is Wood's business. Sale of furniture. Because remember, Wood sells it. So you can see there must be output tax. The output tax is thus 280,000 times 15%. 42,000. Now, remember we need to discuss any special definition. There's no special definition here. Any timing rule. The timing per section 9(1). The timing is the earlier of invoice payment. The invoice in this case 22 February, payment 14 March. Right, so when does it take place though? Thus, deemed to take place on 22 February. What VAT return is this going to be in then? If it's in February, it's going to be in our Jan and February VAT return. Takes place on the 22nd of February and will be in the February VAT return. Right, then we have to just talk about the value, and the value just per section 10, and this is just a normal rule in section 10.3. Per section 10.3, it's the value is the consideration. Right, and that is that 280,000. So guys, this is a strange question in some ways which I've asked here, because what I've done is I'm asking you a very standard question, but you should be able to see that you should be able to answer it from the VAT Act. And this is where students sometimes struggle, and this is something that you must be able to do for yourself, and that is the simplest thing in tax. When you just add an amount to gross income, when you just calculate a VAT amount, can you justify why you're doing it, or are you just doing it because you know you should? And this is what this is trying to show you. So that's why it's important. Remember, start at the theory and then apply it. Always go start at the theory. Great, guys, you should be able to do this question. If you struggled with this tutorial this week, make sure you go back to the work, sort out the theory before moving on to the more complicated matters in week 2. In week 2, you'll see we're going to talk about a couple of quite challenging topics. So be prepared and be ready. And I'll see you then.